Hey, what's going on, guys? I just want to do another quick update on Bitcoin here, and I'm actually going to start with the main count that I have here. It's basically the same count I've had for a couple months now. It's just taken quite a while to play out, and it's very complex. A very complex correction here. And it actually makes sense because you have here, for those who are not familiar with elite wave, you have here a WXYXZ, which, if you count WXYXZ, is 5 waves, and a lot of, usually on a impulsive move, you will get impulsive or motive. You're always going to get 5 waves. So the reason it makes sense for this correction to be like this is because it's going to fool everybody into thinking that this is a bearish motive wave here. Because if you count the WXYXZ, it's the same as 5 waves, obviously. So anytime you have 5 waves like this, the 5 waves will turn into a larger degree 5 waves. So with that being said, this is going to bear trap everybody if this plays out correctly. And because like I said, this looks like 5 waves down, but if you count the subwaves, the rule set is not followed to be 5 waves down. So this scenario is, if you really think about the price action here, this scenario is going to trap a ton of people because you're going to have, you had this massive pump, which trapped enough people, I'm sure, as it is, people that were buying towards the top and, oh my God, we're going to the moon and this is the bottom, the low is in, Merry Christmas, Happy New Year, Hallelujah. But so I'm sure a lot of people are trapped here. And the nice thing about this correction down here is that it's going slow enough. Give me 1 second, guys. Sorry, guys. The nice thing about this correction is that it's going slow enough that it really is not forcing people to sell. So I think that once we get, and of course, this is if this scenario plays out. I have another scenario, and I'll go over that in a minute. But this is the bullish scenario. Say I have a bearish one, like I said, I'll go over that in a second. But I think that once, you get this sideways boredom. People are indifferent. Nobody cares. People are very disinterested in crypto right now. And the reason I always chart Bitcoin is because, in my opinion, Bitcoin is like, and I've said this a million times, but if you're first watching this video, Bitcoin or my videos, Bitcoin is like the S&P 500. It is the entire market. And every single one of these altcoins follows Bitcoin. They all have some relationship and very strong correlation to the altcoin charts and Bitcoin charts. And I don't understand how anyone doesn't see that. It's like blatantly obvious. So with that being said, that is the reason I focus on Bitcoin, because none of these altcoins can do anything without Bitcoin being stable, being strong. When Bitcoin is bearish, the altcoins are more bearish than Bitcoin. When Bitcoin is bullish, the altcoins are typically more bullish than even Bitcoin from a percentage wise. So basically, this also, if you just look at this, just from a simple pattern trader, this is a bull flag. This is a clear channel here. I had this as an ABCDE, whereas the E always fails. But technically it is marked incorrect that way, because even though there's no rule, an ABCDE is always supposed to be in a triangle, according to some people, and I don't agree with that. But it really doesn't matter, because WXYXZ is the same exact thing as ABCDE. They all have 3 subwaves inside them. That is one of the rule sets. They're the exact same rules, the exact same targets. It's the same exact thing. It's just a matter of labeling. So I happen to like the ABCDE because although this is not a triangle, in my opinion, this follows, it's a pattern and it's staying within a channel. But anyways, I think that because this correction is taking so long, everybody is very disinterested. And unfortunately, what happens is this is when you want to be prepared during this time when you're getting this sideways kind of garbage, fake out after fake out, pump, dump, pump, dump, pump, dump, just sideways, no volume, although there was nice volume here. I strongly suspect this to be just another garbage pump. I mean, we went up we went up 9% in 10 minutes. So out of nowhere, you know what I mean? I mean, look at the volume preceding this move here, and then all of a sudden, out of nowhere, there's volume. This is very typical of a pump and dump. A lot of times, not market makers, but whales will do this to create liquidity, to enter their positions going the opposite direction. So they get everybody on board. Oh my God, we're bullish. Oh, we're running up, we're running up, we're running up. And as the price is running up and people are going crazy marketing in, they see the pump. What the whales, quote unquote, the whales, what the whales are doing are entering short positions here. And I'm not saying they're doing this in this move, but it's highly suspect here. Because although you have extreme green volume here, the volume is very deceiving because there's a ton of selling volume in this area also. So basically, they're using the liquidity of everybody running in to mask their presence, to kind of camouflage themselves into getting their orders filled in anticipation of going the other direction. So, and basically everyone says whales, 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 whales manipulate, blah, 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 blah. Where the only thing that a whale is trying to do, and like I've said, I've 20 plus years of experience. I've had whale clients. I've had clients with $30 million in the stock market that I've actually managed. And, you know, basically the motive behind what a whale is doing is to get his orders filled without slippage, without affecting the price, without losing money the second he enters the market. That is all a whale is trying to do. And they're also trying to camouflage themselves because they don't want people jumping in front of their orders. In other words, you know, affecting the price just based on their action. And because they're coming in, they don't want everyone else coming in. They want to come in secretly, and then when the price starts moving in the direction they expect it to move into, they want everyone to jump on board afterwards so that they can take your money, not your money, but they can take the followers' money. That's what they want. So that is their entire purpose. And when you talk about manipulation, you know, I really don't even want to get into that. But everybody has this thing. Oh my God, the whales are evil. The whales control where the price goes. Blah 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 blah. Again, whales are only interested in getting their orders filled without anyone knowing it. That's all they're trying to do. And they need liquidity. They need high volume of trading going on to do that because their orders are so big that it's harder to mask. You know, in other words, if there's a big ocean of millions of fish, it's easier to hide, you know, within plain sight as it is when you're the only big fat whale in a little pond. So that's kind of my analogy. It's the best one I can come up with off the top of my head. But anyways, this is the count that I have here. It is a bull flag. Many people will see it as such. And because this is a 5-wave correction, or I believe it to be a 5-wave correction in this count, you're going to get a ton of people that are confused and will be on the wrong side of this. I believe that when we get this pump, we should get another little leg down here. And once we get this pump, people are going to think that this let me get arrows here going. Oh, shit. Hold on a second. Let me get some arrows going here. Okay. That's it right. Hold on. Arrow. Okay. Once we get this pump here, people are going to think that it is this pump, because a lot of people are expecting this this count. I mean, anyone that's relatively skilled with Elliott wave, or even just looking at this bull flag, they're going to, and then furthermore, to even add more to that, anytime Bitcoin has a massive dump, it's like a disease that everyone has to buy the dip, because they're all expecting the huge pump. And I believe right now, even though people are disappointed in the market, they're always one pump away from jumping back in and FOMOing and, oh my God, this is it. And you see the instability of the way the crypto investors kind of are, and I don't blame that personally on them. This is what a market with extreme volatility creates. You have these massive swings, and it just wrecks everyone emotionally. So again, it's one pump and everyone's bullish, one dump and everyone's bearish. This is just the way that market psychology works, especially in crypto. Like, crypto is like exponentially, everything is magnified because it's so volatile, and whatever. So I believe that everyone's going to think that this pump is actually this pump. They're all going to FOMO in. They're all going to, if this count plays out, they're all going to get disappointed here on this pullback. Oh no, it's right. All the bears are right. The gloom and doomers are right. We're going down, blah, blah, blah. And I think that will force, this move up will give us enough bulls, enough fuel that from the bulls that are trapped to give us this pullback. And then I believe that once that happens, that will give us all the bear FOMO to get us out of here and to get us up to this target up here before eventually rolling over and coming back down. So that's that. That's this count. I don't just like to do technical analysis. I like to do psychology also, because I believe that, yes, technical analysis is very important, and it is, the most important thing when it comes to analyzing markets and stuff like that. I believe that you also have to know the bigger picture here, and the psychology and all that stuff, because really the psychology of the money that's involved is actually what paints this chart. I mean, this is all psychology. This is like if you were a psychologist and you're graphing data on behavior, this is the exact type of stuff that you would have. And in fact, Elliott wave theory does not just apply to commodities. It is actually, a lot of people don't know this, but this is also Elliott wave. He came up with this theory that everything moves in waves and everything moves in cycles, and one cycle is a smaller degree of the bigger cycle. And if you take that into account, I mean, if you really are a creative thinker, which he was, and you can really grasp a deep understanding of this stuff, you can put relationships into this category. If you're married, that you have big waves of upside and FOMO, and your relationship's beautiful, and you took a vacation, and then you come back and you're coming back to the kids and you're correcting, and it's boring and life sucks, and you go back to your job, and maybe you lost that fire for a little while, blah, 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 etc. You get what I'm trying to say. Fashion, whatever it may be, things come back around, bell bottoms came, etc. You get what I'm saying. But that's this count here. Let's see, hold on a second. Okay, I also want to get into really quickly some of the, besides the subwaves, I want to get into Fibonacci here really quickly. I'm trying to make these videos short, and people don't have the attention span, so I'm trying to make these short. Okay, what I have here is from swing low. Oh, let's go the other way here. Okay, we have a swing high up here. Swing high. Let's get this right on here to this swing low here. These are, and I've said this in several videos, these are algorithm targets. These are the bots that are trading. They have software. They're coded their software code is coded to buy and sell these important areas. This 618 65% retracement is a big level for them. It's called the golden zone. And basically this, from an algorithm perspective, separates bullish from bearish, and it separates their trade, whether they're going to long or whether they're going to short. And so basically, if you notice here, if you just look at the swing low to swing high, we broke this this golden zone. So what that means is these algorithms are going to short now. They're going to short any moves up now because we broke this golden zone as far as support is concerned. And what they excuse me, what they are targeting now is this negative 23. This is their next target. This is their bearish target. And if you notice, this very nicely coincides with where I have this this final leg down. So that being said, also 618, this is the negative 618. In other words, you would just have to reverse this. This is where I have us bouncing here. So we had a very nice retrace to this area, but we broke it. So I expect us on any push up now, the bots are going to short, and they're going to cover their shorts here. And as long as this line is held, they're going to flip long. And I believe that gives us the fuel to get up here. Now, really quickly, I'm going to go to the other count, which is, in fact, this here. Okay, so what I have here is this massive dump, which I've covered many, many times. This is wave 3. Very hard to argue that this is a 3 wave. And in Elliott wave 4 is always a triangle. Not always, sorry. The only time triangles can form in Elliott wave theory is on wave 4, wave X, and wave B. And typically the psychology behind that is because the major move, like I said, the motive wave goes into 5 waves. So you're 3, 4, and then the last leg down here for the 5. The reason this happens, this triangle formation, in my opinion, from a psychological standpoint, happens is because the move is almost over, the big move. So enough people understand what's going on, and enough, so many people are expecting this final leg down, that what happens is that traders overcrowd each other. And that's why you need some kind of, for lack of a better word, some kind of fuckery, some kind of confusion to get everybody to be on the wrong side of a trade or to be confused or whatever, because the market will never go where everyone expects it to go, ever. Or at least it might go that way, but it will get there in a way that confuses the hell out of everybody. That's just the way markets work. So that's my opinion as to why these triangles only form in the leg before the last leg. And it actually makes a lot of sense as a rule from a psychological standpoint. But anyway, I have us, if this count is to play out, and this count is extremely valid. I like this count a lot. And, you know, don't shoot the messenger if you're a bull, but this is basically A, B, C, D, E, as you can see. And we have the E always fails. It's always a failure last leg of the correction. And, you know, so this is basically now, if this is to play out, there's all kinds of targets down here. For the 5th, I believe it can go as low as 2100. But, you know, we'll see. And the way we're going to know, and the invalidation points here, and what unfortunately sucks, is that if you look at these two counts, they have very similar targets. So it's very easy to be caught on the wrong side of this, whichever way it goes. So basically, the invalidation points here are, this is also problematic because if, I mean, this, in this count, this is the B here, the top here. So basically, we cannot break this on this leg up here. And as you can see, there's so much room. I mean, we could go, I mean, it's unlikely, but we can go up here and this count is still valid. So if you're planning on shorting or planning on selling, you know, you can really take a beating here because there's so much room. Even though the trend line is here, and you know, this is what a lot of retail traders, they only use trend lines. Any pump up here, they're going to think that this is breakout, and they're all going to rush in, and you know, this, they'll be trapped, basically, is what I'm trying to say. So, and then here on the downside, if this D cannot break lower than where I have this C, so there's less room here to get destroyed if you're planning on buying this dip or, you know, whatever. So the invalidation point is closer to the trend line. So yes, we can have a fake out, but the fake out can only go so far. And like, in other words, if this goes here beyond this B here, then we know that this count is invalid. So we can throw this whole thing out the window. So basically, there's less room down here for a fake out. So, you know, that's basically what's going on here. And the, you know, this is this is very bearish. I mean, actually, technically, both counts are very bearish. There is no bullish count as far as long term. So, I mean, there is, but the likelihood is just not very good at all. So, but yeah, that's kind of what's going on here. We have this triangle. And the way we'll know is once we come up here, once we come down here, you know, we have to see how far this goes up or how far this goes down to know whether this is valid or not. And man, this count makes a lot of sense. Another thing about triangles, any kind of triangle, even if you're just a pattern trader, in any triangle, the more closer you get to the end point of the triangle, the volume starts to die down because the range is tightening. So, and you can see, I mean, it's the same, it's following this pattern. So, you know, this count is very valid, and we'll have to see. You know, in my opinion, there's no reason to be trading this here. It's just, there's nothing here. There's, you know, I mean, what are you going to do? You're caught in the middle here. You know, if this count, you expect this move up, the risk is not worth the reward here. So if you're a trader, if you're a long-term, just wait this out. I mean, there's really, that's, you know, that's my best advice I can give. Where's my other chart here? Get to it. This. Okay. Here's kind of the same thing. Now, what's tricky with this count is you can get a fake out here. The longer this goes on, the deeper this can come down and test this trend line here. Now, one of the things also with a WXYXZ correction is typically the last leg and the first leg are almost identical. Not always, but that's generally what you look for. So if this is the W here, as we have it labeled, and the X wave is not in yet, so we don't know how high this is going to go. But let's just say it's going to go to here. Look at that. I mean, just perfect. So as of now, it sits here. That doesn't mean it can't go here. That doesn't mean it can't stop here. But this green box here is the high probability zone of where this last proposed leg is going to go. So with that being said, the longer this takes, the trend line, as you can see, is dropping. So, and just also, again, from a psychological standpoint, man, how beautiful of a fake out would this be? New low, Chicken Little, the sky is falling. We're going to, $1,000 in 2 hours, and then blast off for the B. All the shorts get trapped and they get completely annihilated all the way up here. Before then, we roll over. So these are like the psychological things you kind of try to look at, but more importantly, you want to focus on the technicals. So this, just as far as this video is concerned, this is the count that is here, equally as valid as the other one. So we have to see how this plays out. Again, again, the triangle and this WXYXZ, they have the same targets. The only difference is that instead of doing this, when this is over, we're going to do this and come down, relatively, way down. So again, perfect opportunity for people to get caught on the wrong side here if you're buying this dip. What I'm going to do personally is I'm going to focus on this, and I'm going to watch these subwaves down here, because if I see this type of action where coming from here, I see something like this, that means that the triangle count is more likely to be in play. So of course I will do an update, and I'll try to keep you guys updated as much as possible. But this is, we want to watch the action and we want to watch the volume, because the volume will give you the evidence a lot of times. So that's what we're looking at. But personally, if I like what I see as far as this just being a 3-wave correction here, then I'm going to go long in this green box here, and I'm going to give this enough room for this fake out here. So about, geez, I hate to give it this much room. I really do, but it's just one of those things where, I feel like this is too tight, because I think we can wick through this low and then still go back up. So I'm going to put a stop loss somewhere in this area here. So, that's my trade, but it all depends on this. If I see the triangle more apt to play out, I will short. Either way, I'm shorting the top of this, because no matter what, in either scenario, we should be coming to at least here. So easy trade. No matter which scenario you're going with, either way, we should be coming down here. So, that's that. I'll try to keep you guys updated as things develop here. But yes, this is extremely boring. This is a boring sideways market. But, you guys really this is when you really want to be paying attention, because unfortunately what happens is you get these massive moves and everybody's late and everybody jumps on later. And, you just really want to be prepared for everything. So, with that being said, I hope you guys enjoyed the content here. If you do, like, subscribe, and see you guys later. Thanks for watching.